Hey everyone, welcome back to another video. Today we're just going to talk about the bearish case for Bitcoin and why we could have already hit the market cycle peak. So the first thing we're going to do is look at just a couple of these indicators, this moving average, and just show why right now the way things are looking right now is a bit concerning. So the recent move that we've had on crypto, the reason why we went from 30-ish thousand to 40,000 isn't because of Amazon or Elon Musk, but just because we've just bounced off of this 50 weekly moving average. And so the reason why that is confusing is because looking back in history and looking at every single time we've done this in the past, it indicates that this is only something that happens if we already reach the market cycle peak and like we're on our way down, and this is just a tiny relief rally. So just to demonstrate, so from this is like pretty much the beginning of the last market cycle, right? From 2015, we've never hit the 50 weekly moving average until we peaked, and then we hit the 50 here, and then we just do this little relief rally on our way down. So the ultimate trend was that we just head down lower and lower. So that's pretty scary because that's also kind of like what we've done before. We did in the past couple months on our way up this market rally, like this market cycle. We haven't hit this 50 at all, and now we're hitting it. And now, so that's a bit concerning that we could just head a bit lower because that's what we did last time. And we've also done this the cycle before. So in this early cycle, right, there was like some before 2011, but the chart just doesn't go back that far. I mean, in this market cycle, we haven't even touched the 50, and then the only time we do is when we've already hit our peak. We do a little bit of a relief rally, right, and then we just go back down way lower. So this was like 677, and we go all the way back to like 150. So that's pretty concerning if you ask me. The only time, well, even if this is not necessarily like the market cycle peak, but then look, we did this little rally, and on our way down, we hit this 50, and we do some sort of relief rally, and then we head way down lower, right? We've actually done this pattern every single time where we hit the 50, we relief rally, and we head lower to the 200 weekly moving average. Hit the 50, go up, go down lower, hit the 200 weekly moving average, and we've done the same thing here, right? Hit the 50, relief rally, then head back lower to the 200 weekly moving average. So what if we do the same thing here, right? That's why there's a good argument to be made that we've hit our market cycle peak, and we're about to do this little relief rally, making everyone feel a bit better about themselves, and then just head lower and to like whatever, maybe 15,000 is where we'll hit as this edges forward in time. So that's reason number one. And if there's actually a lot of reasons. So this is pretty much, so this is the 200-day moving average. So it's pretty much the same argument as the one I just laid out like 2 minutes ago, except for with the 200-day. So looking in the past, the only time we would hit the 200-day, right, is at the end of the cycle. So like if we hit it and bounce right after, that means that we're about to go higher, right? If we see here that the 50 and the 200-day moving average didn't cross, so we were good. So at the market cycle peak right here in 2013, we crossed the 200 and the 50-day moving average. And that kind of just signaled to everyone that that's the end, right? And then we headed way down lower. And then so all the way up in this new market cycle, we didn't hit the 200-day at all. And then once we crossed the 50 and the 200-day, it was over. We headed back all the way down. This was the big bear market. And then same thing happened over here, right? This was like a little mini rally we had before in anticipation of the halving in May, right, which is May 20, right? We always do these little pre-rallies to the halving. And we can see that we did the same thing here, right? We didn't even touch the 200-day during our rally up, and then once we crossed the 50 and 200, it was over. We do a little rally, and then we had way lower. So it's very concerning when you can see that we've done exactly the same thing right now. We just literally did it again. The 200-day and the 50 crosses, and we're right on cue. We do this little rally, and so if literally every single time before we've sunk all the way like way lower, then I could reasonably assume that we have a good chance of doing something really similar. Of course, it could be really tricky because um, so it crosses over here and we head back lower, and you might think this is the bottom, and it rallies to a new all-time high. Well, not a new all-time high, but higher than where we were before. So you're like, oh shit, I missed the bottom. It's about to head up so much higher than before, but then we crash down. So it'll be really tricky because you can imagine like we hit this 200-day, which coincides with the 20 weekly moving average, and then we go back down, like let's say over here, and then let's say it rallies back over here, and you're like, fuck, I fucking missed the bottom. Oh my god, I'm just gonna FOMO it, and then we head like all the way back down over here. So these are all just probabilities. I have no idea what's gonna happen, but these are just like great arguments that we could be seeing like another like 50% correction. And so another reason is looking at the site Look Into Bitcoin. It's been a very helpful tool for me. And so we can see that pretty much there's colors, yeah, and then the only time we hit the blue, the dark blue colors, is if we're about to go way below to hit this line right here, right? This is the 200-week moving average, which is what we just looked at in this yellow line over here, right? So yeah, whenever it crosses, we always revert back to this 200 weekly moving average. Right now, it's sitting at 13,000. So that's just the idea. Whenever we hit the blue, we're about to fucking go all the way back down to this line, right? This is the cycle peak. We hit the blue, we go back down. And then even if at the little mini pre-rally we have here, we hit the 50, or we hit the blue, the dark blue, and then we head back to this purple line. So in our most recent color, we've hit the blue. So, which is a death sentence historically, according to this specific indicator that we're going to hit all the way down here. But notice that it could take a bit of a bit of time for us to really start rolling over, and by then this line would have extended to somewhere around here, leading people to believe that we could hit like $220,000 and that'll be our bottom, which is reasonable, right? I mean, like 20,000 would be like here. Well, that's a bit of a ways, but who knows? I mean, honestly, I have no idea, and I think it's very important to allocate your risk accordingly. Another really good one is a Pi Cycle Top indicator. So this indicator was made in 2019, and so pretty much whenever these two lines cross, can I full screen this? No. All right, well, so basically whenever this green and this orange line cross, it indicates that a market cycle peak has happened and we're about to fucking correct 70%. So it happened here. This one was a bit early, but it was still kind of like, it was 2 months off. Oh, actually, no, it was a month off, but it still did the job. It crossed here, see the green and the orange crossed, and right on cue, right here, April 6th and then April 9th, it was the peak, right? But notice how this wasn't the peak of the market cycle. This was just a local peak. This actually represented the mid-cycle peak. But this once again crosses, and that was the market cycle peak, and we went all the way back down. We did that again in the last market cycle peak in 2017, crossed, and then it was literally super accurate, and then we went all the way down. And so that's what we did here. Right here, we crossed, we peaked, and now we're headed lower. So if you just look at history and see how effective this indicator has been, you have one of two scenarios, or one of three scenarios. One is that this thing is totally wrong this time, and then all the data that we had in the past is no longer valid. Two is that we have done just a local peak, where yes, we will go down dramatically, but it is not the end of the cycle. This is a mid-cycle peak, so maybe we could be seeing that. But what seems to be more likely is that we hit the actual peak like we did here, and we're about to head all the way back down. And this indicator has confluence with this, how we hit the blue, just like we hit the blue here, we hit the blue here, and we're about to hit this 200 weekly moving average, which will likely hit like $20,000 by the time we reach it. So yeah, so that's the bearish case. The video that I posted before this one is the bullish case. I'd say there are arguments to be made for both sides, and so how I think I'll personally do this is that I'll take advantage of this rally, and I expect this rally right now, which has happened time and time again in the past, to hit around this weekly moving average, around 44,000. Right? Maybe we'll even go a little bit above it. And this time, this way, here we didn't, but here we did, and here we did a bit. So I think like once we hit this 20 weekly, I think I'm just gonna take half of what my crypto allocation is and then take half of it off. And so if we end up going a bit higher, that's fine. I'll DCA in. But then if we manage to go all the way back to 20,000, like how these indicators suggest, and how how it's happened in the past whenever we had the crossovers, then I'll be very glad that I bought back in here and I sold here. But that's also risky because on the bullish side, this looks like we've hit the bottom of the mid-cycle peak or the mid-cycle pullbacks, and we're about to rip higher. So it's really, really hard to figure out what to do. Maybe I won't sell, right? Maybe I'll just DCA in every single week for the next like year. I think that's honestly the best way to go about it. So that's the video for today. I hope this was useful, and I'll see you guys next time. Bye.